The decision by Western allies to block some Russian banks from the SWIFT payment system, sending oil prices soaring. We've already seen up 4 to 5% this morning. That plus sanctions raise the possibility of severe supply disruptions to the oil market. And joining us right now to talk more about that is Helima Croft. She's global head of commodity strategy at RBC Capital Markets and also a CNBC contributor. And Helima, watching these moves today, hearing what's happening with SWIFT, seeing the kind of digging in that Putin has done at this point, what's your expectation about what happens next?
I mean, my expectation is that we're going to see crude prices continue to rise. I mean, right now, the U.S. administration is saying we're not going to sanction energy because we don't want to hurt domestic U.S. consumers. But these sanctions, the central bank sanctions, the SWIFT sanctions, are raising a lot of concerns about, can you get paid if you do energy transactions? You're already seeing, major Western energy companies exit Russia, BP, Equinor. I think there's a broad-based concern that these sanctions will ratchet up. We're already seeing some SWIFT sanctions over the initial oppositions of Germany and Italy. What happens next week? Are we actually going to see sanctions on energy? So I think there's broad-based concern about remaining in the energy transaction business with Russia, and I think that's going to continue to put pressure on oil prices.
Helima, one question. We were talking earlier this morning about whether China is going to start feeling uncomfortable with how Putin has ratcheted things up, particularly talking about, nuclear forces being on call at this point and seeing what happens with that. Is this a situation that makes Saudi Arabia and the other OPEC nations feel a little less comfortable with being connected to Russia, too?
That is a great question, Becky, because we're headed into an OPEC meeting this week. And right now, we don't have any indications yet that Saudi Arabia, the UAE, are willing to essentially dispense with this relationship with Russia. In fact, the United Arab Emirates, in that UN Security Council vote, abstained from basically criticizing Russia and blaming them for what's happening in Ukraine. So right now, we don't see any cracks in this partnership. But again, as we go forward, if this conflict intensifies, if Russia starts, for example, shelling Ukraine with more cruise missiles, I do think there's going to be pressure on all of these countries to reevaluate their relationship with Russia.
What's the end impact of BP, some of these other companies that are now ending their relationship with Russia? Does Russia have the resources to go ahead and continue to produce, or does this mean that there's going to be an actual drop in production, whether they can sell that oil to Western nations or not? Just the idea of overall global supply, does it drop pretty significantly?
I mean, the concern is who's going to buy these stakes right now? And again, I'd also be watching for Total's stake in Novatech. So I do think there's going to be a real concern about, even if there are no explicit sanctions on Russian energy exports, I do think it's going to become much more complicated for Russia, obviously, to raise money, to invest in their production. Who's going to be willing to take their production with this much sanctions uncertainty? So I think the Russian energy industry is obviously going to struggle, even if they're not hit with formal energy sanctions.
Shepard Smith here. Thanks for watching CNBC on YouTube.